What's up, everyone? Happy Monday. Hope you guys had an amazing day. All right, so we have some interesting stuff going on this week. Let's get right into the video. Number one, we've got consumer confidence numbers coming out Tuesday morning at 10 a.m. So that's tomorrow morning. We're going to get some volatility in the market as we're streaming. Then Wednesday, tomorrow morning, we get Wednesday morning, we get preliminary GDP numbers. So the second look for this quarter. And then at 10 a.m., we get JOLTS, job opening numbers. So these are also very important numbers that the Fed is basically going to be looking at alongside pending home sales at 10 a.m. as well. Then Wednesday afternoon, Fed speaks at 1:30. And then Thursday morning, we get more news, unemployment claims, PCE, and ISM. And then Friday morning, we get more news. So basically now, for the rest of the week, Tuesday, Wednesday, Thursday, and Friday, we get news every single morning. All right, so keep that in mind. So number two, here's a chart of the SPY, and I'm sure you guys can just see how we were rising this entire time off of volume falling. So the volume has been falling, yet the price has been increasing. That usually isn't a very sustainable thing for price action. So once again, volume is falling, but the price is increasing. So that is not generally a good sign that the price will continue going up in that direction. Now here's a chart of the VIX, and we saw that the VIX was very, very overextended. So basically when the market isn't really giving us a sign, but we see certain other things giving us, if for example, like the dollar was at a level of resistance, but everything else seemed to be, trading normally. For this case, we saw that the VIX was very, very overextended to the downside. And we saw how it was trading very, very far outside of the lower standard deviation away, which is basically the lower level of the Bollinger Band. When this was the case, it was basically showing an extreme, movement to the downside. And when that is generally the case on the VIX, there is usually a big pop afterward. And we know that falling down on the VIX means that the stock market is basically going up. And when we are very algorithmically overextended to the downside on the VIX, there is a higher likelihood that basically the VIX is going to bounce. And when the VIX bounces, then the stock market falls. So yeah, I might have misspoke as I was drawing that arrow. But basically, when the VIX is going down, the stock market goes up. But now, that was basically not going to be a sustainable move, right? So that's why the VIX popped. And as the VIX popped, the stock market fell. So, we clearly just see now the VIX bounced out of its very oversold condition on the Bollinger Bands. And now we have to see how it's going to start responding about 2275 and to 23 level on the VIX. That's going to be very, very interesting to see. The other thing is the dollar. And the dollar, this looks like a clear-cut opportunity for stop losses to be taken out. Essentially, we made a new low today than it was prior. Right, so over here you can see the low was 105.340. Right, on this candle, the low today was 105.321. Right, so it was technically we broke down below the prior lows and wicked, and this was a very, very strong close. So basically what this is showing is we have a very, very high likelihood chance that the dollar should continue and be green tomorrow as well. But of course, that's all dependent on the news that comes out tomorrow morning. But in terms of the technicals of this break below support and close, the dollar looks very, very strong for a bounce below this level, basically. And if we get a clear-cut close above 107.30 again, then this is going to be very, very strong for the dollar. And we would have basically closed above the 618 and then also the 786% fib from this low to this high if we end up closing above this level here. So that's going to be very, very important to see for the strength of the dollar. And usually when a stock closes above that certain point, or they're like a specific fib level, right? So for example, right now, this is basically between the 382 and the 50%, right? This is where the dollar is currently. A close above the 382% fib is not generally a reversal of a bearish move, right? So this is technically a bear flag. This is still technically bearish, right? If you're looking at it in terms of this pattern. But once we close above the 782% or the 618% fibs, then the highest likelihood is that it becomes a very, very high percentage chance that the bear flag is broken and we continue on. So immediately, this is a very bullish situation for the dollar. And we know that if the dollar is going up, then the stock market goes down. So this should continue on higher from a technical standpoint, from whatever else we were just looking at. All right, so there's that for the dollar. So now let's take a look at the 30-year bonds. I don't mean to get very excited here, right? But this is a super, these wicks here these are not bullish wicks. We're basically wicking at the top of a move, right? So now the only thing that's going to be bullish, and we have to basically now look for this, right? If the bonds can make a close above the upper wicks here, then that would be a strong move, a continuation to the upside. But immediately, what we're seeing right now, this is very, very bearish, in my opinion, because we're basically wicking multiple times. We failed at these highs. You could even call it whatever, double top. But these wicks, these are not bullish. And basically, the bonds move in unison with the equities market. So if the 30-year bonds are about to start falling, and they start to really break below levels of support, then that is going to start showing in the stock market, and the stocks are going to start falling as well. And yeah, I mean, pragmatically looking at this is not a bullish pattern right now. Obviously, we're still holding above support. We can still, by all means, we can still hold above levels of support, 126.25. We can hold above 125. Things would still be in a bullish situation, but these two wicks, very, very big danger sign in my opinion. And the only thing that will break that is a close above these wicks. So that's that. So there's that for the bonds. All right, so now here's a chart of the SPY. We can clearly see that as we were basically at the upper level of this falling wedge pattern, falling wedges are very bearish. So as we were at the upper level of the falling wedge, the SPY has continued to see resistance. All right, so we've never gotten clear-cut closes above 403, 404, 405. Every time we've touched those levels, we end up falling lower. So especially with today, the SPY was the biggest loser, and we fell. Right. So now what I'm looking at tomorrow, the most important level that we're going to be watching is if the SPY ends up closing below 392.50. If it closes below 392.50 around this area, then it's going to be a very, very easy short swing, in my opinion, because we're getting a close below major level of support that we've been bouncing around for the past few weeks. And if we get a break below and a close below right here, this would be a good high quality situation to go short. And if it doesn't work out, then it doesn't work out. We cut for a loss. But regardless, it would make all the sense in the world for another one day where we get follow throughs to the downside. That's my opinion. And that is basically how most likely we're going to be playing that for tomorrow. But in general, once again, with the dollar is the main thing at the moment. And if the dollar can continue showing strength heading into tomorrow, then, which is very probable, right? So once again, if the dollar continues showing some strength, then the SPY is most likely going to continue showing some weakness, and we're going to get a retest of this trend line, the lower level of the trend line. If we don't, I would be very, very surprised. But yeah, I mean, the overall momentum is definitely not super, super bullish at the moment. It's definitely not bullish. Like, it's not blindingly bullish. It's starting to get a bit bearish, especially as we get a bit closer to these levels of support, especially since there's a lot of news and everything coming out this week as well. It's going to be really interesting. But regardless, pragmatically, for bulls, we have not been able to close above any of these levels of support. And now the question is, do you want to become, so new bulls, right? New bulls entering into this market. Would you want to become very, very bullish as we get closer to this level of a falling wedge, like the the support here, it's basically on an incline, right? And that's why it's very difficult to become bullish at these levels on a falling wedge. You're better off trying to go short at the upper levels or just playing alongside the momentum as we break below. And it's much easier to go long on a flat, basically, support level because it's much, basically orders get filled, right? But over here, essentially on a, orders get filled a lot, right? But over here on a upward trajectory, right, the level of support is not going to be as sustainable. So it's much easier to break through. Does that make sense? So in my opinion, even late bulls, it wouldn't even really make sense for people to become bullish. I mean, you could, but it would be a very, very aggressive buy opportunity. Can you imagine how it would feel like in the market if we got a retest to this level of support, and from this level of support, we just bounce up completely high into the next few days and we never even come back and, you know, retest? That would be very, very strong buying pressure. So, you know, it could happen, but the odds of that happening is not that high. But yeah, I mean, the easiest trade is just going to be basically going short if we get a close below this lower level. And hopefully, you know, we'll see what happens. But yeah, I mean, it's a toss-up now at this point. It's sort of a toss-up as we get closer to this level. But the main thing that I'm looking at is the dollar should show strength tomorrow. Yeah, you know, if the dollar is continuing to show strength tomorrow, then it's going to be easier to play SPY to the downside alongside momentum. And hopefully, you know, today the market was a bit choppier than normal. Hopefully, into the rest of the week, the market gets less choppy. I don't know how that's going to work because there's a lot of news coming out each morning as well. But yeah, I mean, regardless, it should be a pretty fun week. Historic times regardless. And yeah, one step at a time, one day at a time. We'll see what happens moving forward. All right, so I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys tomorrow. Thank you.